Okay, so right now the let's see, the lesson is being recorded. Okay, you have to accept. Okay. Okay, so what are we going to look at today? Okay, as we said, today's lesson will be on supply and demand zones, as it's the topic most of you are struggling with or are most interested on learning more about. Okay, so today's lesson will be on supply and demand. Okay, so we're going to look at, as we said, at four main aspects I consider when determining a supply and demand zone. Okay, how I validate it, how I say if it's good, if it's bad, etc. Okay, I imagine all of you can hear me well, right? Yes. Okay, perfect. Yes, yes. Okay, hold on, I'm answering for a second. I'm answering some messages on Telegram. Okay, some of you are asking me some questions, so give me 1 minute so I can answer them very fast. Okay, great. Okay, now let me mute this last person that joined. Okay, now let's continue. Okay, so how do I identify my key levels, okay, of supply and demand zones? As we've spoken about many different times, okay? Oops, hold on. We want to look at the formation of some order blocks, okay? Where is my drawing tools? Right here. Okay, so we want to look at a rally base rally. Okay, most of you will already know this, so I will try to go fast through this first part. Okay, so this is the first demand zone creation scenario. Hold on, let me add the text to my favorite so I don't have to exit. Okay. Okay, so this is the rally base rally. I will try to go fast with this, but let me do it more clear. Okay, as you can see, price does a rally. Okay, it then forms a base right here. Okay, and then it does another rally. Okay, don't worry guys, because all of this will be recorded so you can later on get back to it. Okay, so as you can see, price has gone up, doing a rally to the upside, then has done a base, and then a rally, okay, which has broken the base. And in this case, if we were to trade this, we would be looking to buy on the retest to this zone. Okay, I'm placing our stop loss beneath. Okay, but we will get back to this later on. Okay, so do you understand this? Rally, base, and rally. And this gives birth to what we call a demand zone. Okay. I imagine this is clear and all of you understand this perfectly. Yes, now we will go back to the chart. Okay, we're looking firstly at some examples. Okay, and then we will look at real-time, real-life examples. Okay, so this is the first example. Now it will be much faster, don't worry. So as you go practicing, you will start seeing this all the time. Okay, and you will identify them very easily. Okay. Oh, sorry. Rally base. Okay, this is the first example of a demand zone formation. Okay, the rally base rally. Okay, now we're going to fastly look at another formation. We're going to look at the four main formations very quickly, and then we'll look at them in the graph, okay? The next formation is a drop, base, drop, okay? Okay, so essentially it is exactly the same, okay, but to the downside, and this, well, it's the same. Instead of a rally, it's a drop, a base, and a drop, okay? And this would be our entering area. Hold on, let me. So this formation right here would be a drop, base, drop, okay? So you can see it has dropped, it has formed a base, and then it has dropped. Our ideal entry would be at the retest of the zone. Okay, and this has formed a supply area. Now we will start getting a bit more interactive with you guys, okay? Supply zone. Can you draw on the chart itself? What do you mean, Terry? No, right now we will get into these specifications of time frames, etc. Okay, but firstly, let's understand how these formations. What are these formations? Okay, now we will get into the chart. We will get into what time frame is better for what, etc. Okay, but firstly, let's look at the 4 types of formations of supply and demand zones. Okay, we have 2 left. Okay, so the next one would be a drop, base, rally. Okay, drop, base, rally. In this case, what would this formation be? Oops. What would this zone be? What would we name this zone in this case? Demand, exactly. Okay, well done. In this case, price has done, okay, a formation of a drop, base, rally. Guys, all of the questions you have, write them down, because now I will do a 3-minute questions and answers. So write them down, and now I will get to you, okay? So this would be a demand zone. Okay, and last but not least would be the formation, or the last, let's say, zone formation, which would be a rally, base, and drop. Okay, and now what zone would this be? This is very easy, come on. Supply, exactly. Very, very, very straightforward, okay? Well, guys, this is the formations of supply and demand zones, okay? These are the 4 ways supply and demand zones are formed, the only 4 ways, okay? And now we will look at them at each one of these examples in the graph, okay? So this was a rally, base, drop, okay? And in this case, it forms a supply zone, okay? So these are the 4 main formations. And there's a question somebody asked, I want to point out, okay, because it's quite good. And the question says, by Abel Silva, how do you know if the price will go down or it will go up from supply zone? So do you refer when price is in this area? How do I know if it will go up or down? So as traders, what we are waiting is for confirmations, okay? We're never going to trade when price is forming the block, okay? We're going to wait for price to break out. It will break out to the upside or to the downside. and we will always trade on the retest, okay? So always the trade must be on the retest, okay, to the area. I'm not sure if this is answering your question, okay? But the entry must always be on the retest, okay? After price has broken out the base and we know the direction of the price, okay? Does this answer your question? Well, to know in advance without having to wait for the retest, this is something I don't recommend, okay? But some ways that help me induce if price will break out a zone or no is, for example, well, firstly, if the trend is extremely bullish, for example, I know price will most likely break all of the supply zones, okay? It will just break, okay? So if the structure and the trend is, for example, really bullish, I know price is most likely to break all of the demand, all of the supply zones, okay? Or if a zone has been tested many times, for example, let's see, how can I do this? For example, if price, let's see, where is my drawing? Yeah. For example, if price forms a supply zone, okay, this is another way for me to say, okay, price might break out the zone. Then it goes down, it tests the zone, it goes down, it tests again the zone, it goes down again. Then if price reaches again this supply zone, most likely it will break out, okay? Why? Because this zone hasn't been tested, okay? It has already been tested and isn't fresh anymore, okay? So this was the supply zone. Price tested it once, okay, good sell. Price tested it again, okay, good sell. But when price reaches the zone a third time, then the zone the zone is not fresh anymore as it's been tested several times. Then I know price might break through this zone, okay? Does this answer your question? Yes, we will get into volume and everything right now, guys. Hold on. I'm not sure, Victor, if this answers your question. Let me silence everyone. So basically, the way I know if it, like, you never know nothing for certain, okay? In the market, you have to adapt to changes and try to find your odds statistically, okay? In patterns that happen in the market, okay? I will never know if price will break out or no. But I know that if the trend is very bullish, for example, price will most likely break out as supply zones, or if the trend is very bearish, I know price will most likely break out demand zones. Or if the zone is not fresh enough, I know price might also break it out, okay? The zone has already been tested many times. Most likely the next time price reaches the zone, it will break out, okay? I'm not sure if this answers your question. And then what happens, the last thing before we move on to the graphs, what happens when price breaks out the zone, okay? So it has formed a supply zone, but then instead of respecting here, it breaks out, okay? This is something very common, okay? And this is called, in this case, supply becomes resistance, okay? Supply becomes demand. The supply zone becomes the demand zone, okay? So supply becomes demand. So as you are asking, Victor, in what cases can this happen? For example, in a very strong bullish trend, okay, which is what happened today, for example, to us, we were entering sells on the supply zones, but as the bullish trend was stronger, it was breaking out these sells and turning that supply zone into a demand zone. Okay, so this is something very important to have in mind. Okay, these are the formations of the supply and demand zones, and these are also possible scenarios. Okay, when supply zones. Okay, so here you have the rally base drop. So rally base drop forms a supply zone. Okay, so we would most likely enter a sell here, but in this case it breaks out, which means that supply becomes demand. So we are going to look for buys, okay, right here, because the supply now turns into a demand area. And this could also happen vice versa, okay? So this could also happen this way, okay? So price forms a demand zone, but then it breaks out and then respects as a supply zone, okay? So in this case, as you see, drop base rally, drop base rally forms a demand zone. We would most likely enter a buy here, but the price breaks out. So we are going to wait to enter a sell, okay, as the price or the zone is acting as a supply now, okay? So in this case, demand becomes supply. Demand becomes supply. Okay, this is that simple, guys. This is everything as supply and demand zones have, okay? Now we're going to look on how to refine them with volume, etc. But these are the formations of supply and demand zones, okay? Is it clear? Now we're going to move on to the graphs and identify each one of these examples in the real life graph, okay? So let's do this. Hold on, let me answer one message. Okay. So, for example, let's look at our rally-based rally example. Okay, you will find plenty of them. Okay, hold on, let me delete everything. For example, look, bullish trend right here. Okay, let's see. Like I can see one right here. I mean the 15 minutes, sorry guys. Let's go at the 2 hour, for example. Okay, so look. The way we identify supply and demand zones, okay, which makes it much easier for me. Okay, look here, what a wonderful one, is to look at an indecision candle followed by a strong wick, okay? So right here, this is the 2 hour time frame. And where are my drawing tools? And right here, as you can see, price has dropped. It has done a base here. And then it has kept on dropping, okay? Well, until down here, okay? Oh, sorry, they are knocking to my door. Hold on 1 second. Okay, they were mistaken, sorry guys. Okay, so right here, if you have looked at the ebook, a way to identify the supply and demand areas, which makes it very easy, is to look at indecision areas, okay, followed by strong wicks, okay? Followed by strong candles. Okay, for example, here we can see one, okay? So you can see price drops, it does a base right here and a drop, okay? Another base right here and a drop, another base right here. Look, let's look at it like this, okay? So as you can see, price does a drop, okay? Then a base, and then a drop, okay? Drop, base, drop, okay? So this is our first supply zone. As you can see, price here does a perfect respect to it, that this is the first zone. We would mark it somewhere there, okay? Then price drops again and does another base and then another drop. Okay, so we could call this another supply zone, okay? Then price drops, and here, if you look larger, it does another base, okay? In the larger, let's say in the larger picture, it does another base, okay? If I go to the 4-hour time frame, hold on, I will see this base more clear. If I go to the daily time frame, I will see this base even more clear, okay? Indecision candle followed by a strong wick, okay? Are you getting this, guys? Are you understanding me? Oops, sorry. Okay, so this is how the market is moving inside a trend, okay? Okay, drop, base, drop, it means supply zone. We would say supply zone. Now we're going to look at how to identify the key levels, okay? Supply zone, another supply zone. Right here, as you can see, price does a drop, base, rally, which means this is a demand zone. Okay, price right here does again another rally, base, rally, which means another demand zone right here, okay? Then here price does, all of this is a base, but I'm going to just get the indecision candle followed by the strong wick, and in this case it respected the imbalance where it didn't reach. Okay, so this would be a supply zone, another supply zone, and this would be a demand zone. Okay, so now how are we going to know which levels to trade? Okay, if I'm going to trade, let's imagine, let me add the replay. Let's imagine price is here. Okay, let's imagine price is here. And as we can see clearly, price is in a downtrend, okay? The structure of the price is bearish, okay? It's doing lower lows and lower highs all the time, okay? Lower low, lower lows and lower highs all the time. So the structure is bearish, okay? So we know we are only going to focus on the supply zones, okay? So this, we delete everything that has to do with demand, okay? Because we are focusing on the supply zones. Okay, as we identified right here. Okay, as we identified right here, these are the two supply zones, okay, closest to the price, okay? Closest to the price, these are the two supply zones, okay? Then how am I going to know which one to trade, okay? How am I going to know? So this is quite easy. Always look for the zone which is most far away from the price, okay? Let's see how I can explain this, okay? So if we have these two supply zones, I know most likely price will do a liquidity grab up here, okay? Because most people will start entering here early, and as there's a supply zone above, price will most likely do a liquidity grab, okay? It's quite hard to explain, but you always, for example, if you are looking for sells, okay, because you're in a bearish trend and you have identified some supply zones, if you have a supply zone, but 25 pips or 50 pips above, you have another supply zone, wait for the zone that is the highest, okay, because it will be the safest always, okay, because markets tend to do liquidity grabs. It's the way they have to function, okay? It's the only way the market has to be effective and find orders. Okay, did you get this, guys? So the main problem why people, this is the common mistake, the most common mistake, okay? People will short here hold on. This is a typical mistake, okay? People will short in this zone. Okay, because it's a supply area, okay? The zone looks great. The zone looks great, okay? People will short in this zone. Boom, boom, boom. Well, maybe they put the stop loss a bit higher, or no, or it breaks out and stops them out directly, okay? Breaks out and stops them out directly, or no, okay, it gives them a bit of respect, boom, they start loading more, and then what happens? You will see, okay, price breaks out the zone. Retail traders then are, okay, now price broke out, I'm going to look at the supply becomes demand, I will enter a buy here. Because retail traders haven't seen this zone, okay? They are not taking into consideration this zone. They will then take this buy here and they will get stopped out again. Because what happened? Above their supply zone, there was another supply zone which wasn't that far away. And as you see, price will always look for the freshest zone, okay? The one that gives the best price, let's say, before doing the movement, okay? Do you see this, guys? Do you understand me? Because it's very easy, but for me, it's being quite complex to explain. So please confirm me if you are understanding this. Why I would trade this zone rather than this zone. Okay, yeah. Okay, perfect. Okay, great. So basically inside the same structure, okay, so this is a bearish structure. You have to look for the supply zone that gives us the best price, okay? So inside this bearish structure, because if price breaks out this high right here, then we are changing to a bullish structure, okay? If price breaks out this high right here, we're changing to a bullish structure. So inside this bearish structure, you always have to look for the freshest or the zones that gives the better price, okay? So selling here is selling at a better price than selling here, right? So that's the point. Now, guys, a supply zone is determined by the drawings I showed you earlier, okay? But when you see this sort of doji followed by a strong candle, this is also like a base, okay? This is something, this means that here there has been indecision, okay, of orders, many orders, buy, sell, but then institutions have come and they have sold and price has decided to go down, okay? And here, as this is an institutional candle, and institutions move billions of dollars, here there are many orders remaining, okay? Many orders remaining that didn't get executed with all of the institutions, okay? Institutional orders. So what happens when price reaches this area? All of these remaining orders that were left from this indecision candle get executed and price starts moving down, which then gets all of the institution traders and some retail traders to even move the price lower. Okay. How many supply do you need? How many supply zones you need to identify to do safe trading? This depends. You have to look at the freshest zones, okay? How do I determine a fresh zone or a very good supply and demand zone? Okay, so first of all, what I really like to see is this example right here, okay? An indecision candle followed by a strong candle, okay? Let's see, for sure we're going to find more examples of this. Hold on. For example, let's see, there should be thousands of these examples because it's what I trade daily. But right now I can't see any. This is weird because it's always full. Wait, let me hop onto the 4-hour time frame. Well, look, here we have another example, okay? And look at the respect. Okay. Oops. So for example, you have this indecision candle followed by a very strong wick. Okay, so as you can see, price has done a drop, a base here, and then a drop, which means this is a supply area. Then when price came back to the supply area, it sold off, okay? This is full, guys. If you don't see on the 4-hour time frame, you will see on the 2-hour time frame. If not in the 1-hour time frame, if not 45 minutes, if not 30 minutes, okay? So the first point to consider is a strong, well, an indecision candle followed by a strong wick, okay? For example, up here, this would be another good supply zone. Well, it's plenty, guys, it's plenty. As you go trading, you will see, you will find these patterns all the day, okay? Then the next step to identify a supply zone, a fresh supply zone, is if it has been tested or no, okay? For example, this supply zone right here, it has already been tested, okay? It has already given the sell opportunity, okay, right here. Maybe targeting this low right there. Okay, it has already given the sell opportunity. So right now, for me, following my criteria, this is not a fresh zone anymore. Maybe the next time price reaches this area, it will break out, okay? So this is not a fresh zone anymore as it has already been tested, okay? Then another interesting thing to do to look at a zone and to see if it's variable. I don't have the volume here, so I have to flip onto my other Goldie chart. Okay, gold is rejecting the zone we said during the TikTok, the Instagram live, rejecting very good the sell zone we spoke about during the TikTok live. Okay, so how am I going to see the zone? Look, here we have another example. Okay, look, where price is at right now. I'm not sure if you can see, but if you look closely, this is the volume profile, okay, which shows us the POC, which we will talk about all of this in another class. But this is another confluence I like to use for my supply and demand areas, okay, which is the volume profile indicator. As you can see, price has reached the POC, okay, the POC, and it's starting to reject. Well, from the POC, it rejected almost 80 pips, okay? So a great trade, okay? So a fresh zone, how am I going, let's just recap, how am I going to look for a fresh zone? Victor Escalona, so why not wait for that third supply zone? I will get back to you right now, sir. Okay, so fresh supply and demand zones. First of all, indecision candle followed by a strong institutional candle, okay? A very strong institutional candle. That's the first aspect. Second aspect, if it hasn't been tested yet, okay? If it's a zone that hasn't been tested yet, okay? The third aspect, is there a confluence with the POC or as well the Fibonacci? Okay, as well the Fibonacci. This could be, as you see, on this supply area, I have some confluence with the Fibonacci. Okay. You will see, guys, as you go practicing and looking for the supply and demand areas daily, you will get much, much better at them. You will see them all the time, and you will see how price respects the zones all the time. Now, Victor asks, so why not wait for that third supply zone? What third supply zone? Sorry. This one up here. Because as I said, the way I like to identify my supply zones is, or to identify a very fresh supply zone, is by an indecision candle, okay, and a strong wick, and a strong candle, okay, after it. So let's say this is a very, very good looking supply area for me, okay? Very, very good looking supply area. When the market does an indecision candle followed by a strong candle, institutional candle, that means that's a very, well, that's a supply or demand zone I really like. So in this case, in this impulse right here to the downside, there are two supply zones that meet this requirement, okay? You have an indecision candle followed by a strong wick, which is this one right here, and which is this one right here, okay? This is also a supply zone up here, okay? Rally, base, drop. This is also a supply zone. But visually, these ones are much more appealing, okay? And this formation gives birth to much better supply and demand zones, okay? Then these are the two supply and demand supply zones I get. Which one am I going to trade? The one that gives me the best price, which is this one, okay? The one that's most far away. Or if not, you can trade this area, put a tight stop loss there above the zone. If you get stopped out, you can then enter again in this area. Okay, this is completely valid. This is completely professional. And this is also another way, okay, when there are multiple supply or demand zones, another way to trade them, okay? Okay, so how are we going to? Let's just do the last time I'm going to repeat this. Fresh supply and demand zones are a strong indecision candle, okay, followed by a strong candle. Then zones that still haven't been tested, okay, still haven't been tested. And lastly, zones that can add other confluences like the Fibonacci, okay. Let's see, for example, from this impulse, bearish impulse, you can see Fibonacci, if we entered right here, it was pretty close to the zone, okay, so it was a pretty good entry, let's say. Or as well, another good confluence is the POC, okay, which is the volume profile indicator I just showed you a few minutes ago. Where is this? Which is this indicator I showed you some minutes ago, okay? Then let's look at the next part of this class. Hold on. Okay, so, well, volume as a confluence, okay, volume is a good way to understand supply and demand areas. For example, let's see if this has been respected, not yet. Are you getting me, guys? Do you understand me? The indicator is called guys, don't stress. We are about to finish the content, okay? And we will go on to the questions, okay? Where is
those wonderful bulbs?
Sorry, let me mute everyone. Okay. Well, I use Premium TradingView, but I think you can get this one for free. Where is this? Volume. Okay, it's this one. Fixed range volume profile, okay? This is the indicator. Okay, so volume as a confluence. Let's get back to this example right here, okay? Let's get back to this example right here. Let's see. Why is it? So as you can see, when price formed this rally-based rally, okay, this area, the candle before it, the candle during the formation, all of them had a higher volume, okay? in comparison to the rest of the session. As you can see, this indecision candle, which is, let's say, the key one. Chat. Sorry for being late, no problem. Okay, so volume, as you can see in this indecision candle on our supply zone, price has shown a spike in volume. What does this mean? That here there's a huge loading of orders, okay? Loads of buy, sell, and then price has finally decided to go to the downside, okay? This spike in volume, as you can see down here, okay? This spike in volume is only done by institutions, okay? No retail traders has any power to do this spike in volume you can see right here, okay? So this spike in volumes means this is an indecision candle which is done by institutions, which again tells us if it's in a supply zone, this is a strong supply zone, okay? A zone where institutions are placing their orders, okay? Oops, hello. Let me deactivate all of the audio. Okay, so do you see this, guys?